right, sit down, tune in, turn on. It's time. You got about 3 minutes and 40 seconds to go to the cash open here on this Friday morning, March 8th, 2024. Spoos up a mild 750. There's actually a huge amount of movement priced in for today's trading session. I actually want to start with that because, well, there's a huge amount of movement priced in for today's trading session. And I got to tell you, just you don't necessarily see it reflected right here. As soon as I saw that jobs number come out, and I was like, oh, wow, they're going to be up 30 or 40 handles. And they're not. They're not right now. So when the jobs number effectively came out, the S&Ps, they were just down mildly, down like $6-7. So we spiked a little bit, just kind of moderating and hanging out right now. The bond market has actually seen just a little bit of sell side activity in here. Again, we're opening from, at least from where I sit, this is actually largely unchanged and a little bit of a surprise. And again, so you saw the jobs number probably come out. The jobs number was really, really strong. I'll explain the implications. Strong jobs now is probably a good thing for markets because Jerome Powell is not relating right now the interest rates cutting because of strong jobs. And he'll just let the jobs run out of control. He doesn't care as long as inflation comes down, which actually makes a hell of a lot of sense. It's the first thing that's made sense in a while. Anyway, the market right now it's higher. However, volatility again, it's off, but very, very mildly here. Look, you're going to have a fairly dicey cash open. There's going to be a lot of fast moves on the screen. The interesting thing this morning, when you start looking down the usual suspects, first of all, in the financials, there's like almost no bid. The financials are basically flat, which so is the market. And again, don't look at the marketplace as being higher or lower. You know, if it was up 15, if it was up 20, great. I could have expected it to be up 30 this morning in the jobs number, but I'm telling you, it's sketchier out there than you might have anticipated. So you got the financials that are basically unchanged. You got the energy sector, and I start with these because they're supporting roles to the marketplace, right? And the energy sector is basically unchanged. Nvidia, okay, what do you got inside of Nvidia? You got to move. It's another like $25 to the upside. Here, this gets interesting. Tesla, okay, and then, well, we'll jump to Tesla in a minute. Microsoft, this is probably one of the most interesting players, actually down very mildly in pre-market, which surprises me. So you're going to come in here, and as I said, you don't look at this market as anything but unchanged. And guess what? It now is massively unchanged. Apple in the morning, seeing sell side activity right now, actually taking it right back down to flat. There is still issues. Okay, there's two tech stocks that are basically running the market. By the way, Tesla does have a little bit of a bid under it, but this one could fade very quickly. As we come into today's cash open, you know what? I'll be honest. Forget about the advanced decline line. Seriously, it's not going to. Forget about even ticks. I don't think they're going to help you very much right now. You're going to see a lot of price action, though, come out in a hurry. So, again, be really aware. That thing is early. I double horned it. Okay. Double horn. Anyway, there's going to be a huge amount of price action, as I was saying, as the bell goes off over here, the advanced decline line. So I said, you pay no attention. You knew it was going to come out about 50-50 in here. Apple is now flat. Okay. By the way, Apple in the pre-market had a decent bid under it. Apple's now flat in the morning. Microsoft's actually slightly down. Okay. Nvidia seeing some really wild action in the first couple of seconds of trade. That's your market right there, and it continues to be the market. Not even financials are helping us per se today. And then a side order of Meta. Meta is like sideshow Bob at best. Anyway, the reason that I'm trying to be just really focused today, less on ticks. By the way, speaking of ticks, okay, ticks are positive 1,000 coming out of the gate. That's really, really strong, yet doesn't make a difference. Okay. And Corey Rosenblum is probably listening to this going, come on, man, you're killing me, which is okay. I am. Corey. I'm discounting all of it because looking down the tape of some of the usual suspects. Okay, first of all, the argument that Costco is moving the markets. Yeah, is it really moving the markets? It's down some 4%. Did it have any impact whatsoever on this marketplace? And the answer is absolutely, unequivocally not. Right. So Costco is down. We'll talk more about it because it has another about $3 right now to hit the lower edge of the expected move. It's going to hit it. Okay, this is going to happen inside of Costco, but it's having no impact to the broader marketplace, nor is it having an impact per se to many of the other products in the category that are competitors. I mean, you could make an argument here for a Walmart. Walmart's down in sympathy, maybe. It's not having any impact, obviously, to Target. Hey, like me. I'm still losing my mind over the fact that Target, in their most recent earnings, which of course was this week, was talking about their slippage or like loss, whatever the hell they call it. The theft, okay? They don't call it that. Seepage, slippage, theft, whatever the hell you want to call it, was $500 million. It was 500 million is what they were expecting in 2024. Okay, at what point is it worthwhile to put I don't know, some security maybe in the stores? Like real security? Okay, hire some people, watch. I mean, I bet you could do it for less than $500 million. I'm just throwing that out there for you. $500 million. Okay, breakage, slippage, sloppage. The hell, shrink. That's the word. Seriously, I couldn't get it out, man. I couldn't get it out. I've only had maybe 50 milligrams of coffee and caffeine, 50 milligrams of caffeine, probably about 5 ounces of coffee, but okay. Yeah, there's shrinkage. Here we go. The National Guard. There's private armies you can hire. Target should hire a private army. It's good stuff. All right, continuing on. It's shrinkage. I like that one. It's even better. I turn on Seinfeld basically every night as I'm like about to go to sleep, like put the timer on over there. It's very soothing to me. Very soothing. Pick up strange things though in my sleep. So the contract size to begin with this morning is rather heavy and extreme. Look, I'm going to explain something for just a few minutes just about today's tape. Okay, something that you might not necessarily see just looking down the list of some of the usual suspects. Okay, I mentioned this yesterday, and it was it was spot on. And I'm going to mention the exact same thing today, and that's this. Okay, you knew yesterday we were sitting right where the week started. And you know what? I cannot stress enough. Okay, when the market is flat on the week, and again, this is a little bit of a wild week, right? Started on Monday with nothing. Tuesday, some big sell side activity. Wednesday came back a little bit. Obviously, yesterday opened literally right here. And my comment to you was there was a huge amount of gamma risk and that we're going to move. And, even took some crap in an email on that one. You don't know we're going to move. Really? We moved, some 50 handles. It's absolutely insane, though. And I know this doesn't look like a 50 handle move, but you got to count. We gapped from here to here. So you gapped up into what was basically a 50 handle move. Okay. Today, we're not on, okay. We're not on the unchanged, but mark my words, there is a crap load of movement priced in for today. Okay. And you know what? In fact, here, the way to show it and the most effective way to show it is if you look right now at the SPX, and one of the things you guys have got to be able to like wrap your arms around, there's absolutely times where directional bias, okay, it matters. Of course it matters, especially when you have bullish or bearish positions on. But one of the single most important things that is just overlooked, is the overall movement that's being priced into a marketplace. And this one's freaking huge. So right now, even after the jobs number and all the crap came out, we still have $24 of movement priced in. But forget that. You don't look, okay, at the expected move in kind of like motion. It just basically tells you like, hey, there's still a lot of volatility packed in there. Okay. You look at the expected move in the most raw form. That's what you have to look at to be able to garner really anything from it. The most raw form is last night's close. That really is your expected move. It's 36 bucks. Okay. That's huge. Why is it huge? The entire week was expecting 64, but here we have today's trading session, $36. Okay. This is not going to be a slow kind of day. Now, on slower days or whatever, yada, 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 we just meander. Right now we're meandering, no problem. Okay. Look, we could still finish unchanged in the day, but you have to be prepared for a significant amount of movement. And what the expected move is, okay, it's not just some random like calculation. I mean, it is a calculation, but it's a skin in the game number taken from the option pricing. Okay. And when there's, look, $36, straddle or strangles, it's basically almost what, $37. Yeah, it's a $37 straddle yesterday. Okay. You have to understand just the hedging activity alone from that, okay, is going to throw these S&Ps around. So it's kind of all hands on deck for today's trading session. But as I've said to you a lot lately, you got to kind of let it open up. Let the marketplace kind of open up. And what's kind of ironic about, big, when I'm saying big movement, I'm not here to actually tell you, okay, off the bat, I'm not going to tell you bullish or bearish. I will say this, the volatility, okay, has really bothered me this week because it's been creeping higher in a marketplace that's been going higher. That is unusual. There's just no question it's unusual. Okay. We've seen it before, but it's usually commonplace to see some wild volatility associated with market that's rallying, with volatility that's rallying. Okay. You typically get wild, okay, unbridled enthusiasm, okay, in terms of two-sided trade. This week, okay, I would say that this week you have had some two-sided trades. A big dip, obviously, on Tuesday. Don't worry, they bought it. All right. The week isn't over. The week isn't over. So right now you have the NASDAQ unchanged. By the way, you don't look at something that's down 15. It's 0.6. Unless you're making like 0.3% of a move, no one gives a damn. Like that's the truth in there. Like, don't worry about it. We are seeing some market cap kind of weigh just a little bit on us. Like, look, Microsoft down 0.4%. Okay. I wouldn't read too deeply into this. It's not exactly, trend down. It's none of those. I mean, take a look, and I'm really zooming in here to show you something that is, to me, interesting. These are magnificently large 1 minute candles. Okay. I know we're only 9 minutes into the trading day. Okay. But these are magnificently large, okay, moves in Microsoft for 1 minute time frames. And really large. And I mean, when else do you see $1.20, $1.50 kind of moves per minute? Something's up in terms of market stability. It's all over the place right now. So, by the way, when you see stuff like this, okay, we're not picking a direction. You just throw up your hands and just wait. Okay. All we have to do is break a little higher, break a little lower, and then everybody has to hedge in that direction. Picking a market direction in something like Microsoft this early in the day, that's futility. Okay. This thing could break substantially higher, substantially lower. I am using Microsoft, okay, not just as an example. This, okay, is going to be a critical component, right, to the marketplace. Start to see more sell side in Microsoft. The S&Ps would not be able, okay, to rally all that significantly. I think that Microsoft is kind of the linchpin in some of the marketplace today. Meanwhile, Meta already has a bid to the upside. Look, we've seen that movie before. Yesterday, an explosive move to the upside. Okay, we already know. What do we know about Nvidia? Okay, Mr. Toad's wild ride. You're at 3K plus sigma move this week. Okay, but again, it hasn't been, okay, Nvidia that caused some of the bigger sell side activity earlier this week. Okay, Microsoft was a critical component to the down move. Again, today, very, very edgy. Speaking of edgy, just want to bring you into this. Microsoft, and I kind of knew the price in here. Microsoft is really critical. That's why I actually keep bringing it up. Microsoft is literally sitting at the lower edge of its expected move on the weekly. And this is auto expected move, but pretty damn accurate. So it makes it that much more pivotal, okay, at this moment in time, because it is actually sitting there. Now you can see the S&P is starting to pick up a little bit here, right? Just a little bit. Not ready to call anything just yet, but the problem that we're going to be in here momentarily, all you have to do is roll just a little bit further up this hill, and we start to accelerate. And that's gamma risk 101. Whatever direction that we move in, everybody has to trade in that direction. Okay. And when I say everybody that's in the market making proprietary trading business, they all trade with the dynamic of the market. That's what dynamic hedging is. You don't hear the term dynamic hedging all that much anymore. By the way, speaking of dynamic hedging, look at the financials. Okay. Those things were unchanged just moments ago, up like 3 cents. They've actually taken off to the upside just the last couple of moments. But as the financials are rallying, tech right now, just kind of stuttering along. It's not really doing anything. Okay. You haven't seen any real move out of Nvidia just yet. Meta, okay. It's bid, but nothing too crazy. Amazon, okay. Amazon actually feels like there's some weight to the downside. And again, Microsoft still completely undetermined. So even though we see the S&P is up some 15 and they're really close right now to breaking to the upside, okay, I am not ready to call it just yet. Okay, not ready to call it. Anyway, with that being said, we're going to look around the list, some of the usual suspects in here. Again, Microsoft, really unusual trade in here this morning. As I said, don't call anything until Microsoft makes a more substantiated move. If Microsoft does break, okay, the lower edge of the expected move, it means a lot. It's going to put a lot of weight into the S&Ps, stall them out a little bit. But again, in the overall marketplace, let's get rid of that. In the overall marketplace, the kind of price action that we're seeing the last few days, okay, there's one thing that's reality in here. This is the S&Ps, okay. Look at the sheer magnitude again of some of the moves from high to low. They're huge. Okay, we are expanding quite dramatically in terms of what we would call historical volatility. That's actual price action in markets is expanding. Last week, you could say that's pretty big consolidation of price action. There is definitely an expansion of some of the price action in the last couple of trading sessions, and it's notable. That probably has a lot to do with why volatility seems amped up to some degree. Speaking of volatility, today's the first day that it's actually cooling off just a little bit. I mean, volatility is cooling off. Vol futures not doing that much this morning. They dropped after the jobs number. Looking to the bottom of the screen over here, some of the vol was finally starting to subside, but really minimally. Like, this is not what you would expect for, look, we're coming into a weekend. The market has rallied back this week. Volatility, especially like short duration volatility, refuses to die out. And the irony is long duration volatility, it's the same thing, okay? It doesn't look right for a market, okay? That's basically, it's at an all-time high, like right this second, it's all-time high, okay? And by the way, we're going to break it, and we're going to have a little bit of room to the upside over here, okay? Meaning that here we come. You would see volume start to pick up a little bit right down here as we break into new highs, and we just did. So here comes the volume. And again, how do you know the volume? Look, the volume is really important, and the reason it's so important, volume in the S&P futures, okay, is purely algorithms that are hedging, okay, existing risk. You don't look at this and be like, oh, everybody's buying right now. Yeah, they're buying, but they're using it as a hedge. So you expect you crack into new highs, it's uncharted territory. There's that implies right there when I say uncharted territory, no one has any hedges on at this level. So what do they have to do? They have to buy. Okay, there's no if, and, or, but about it. When we crack to new levels, you got to buy. So S&Ps now are up some 20. That indecision from this morning is playing out right now to the upside. Much to my dismay, it's playing out to the upside. Nevertheless, okay, as we go a little bit higher over here, bonds, okay, still largely channeling back and forth in the unchanged. Speaking of bonds, the bonds are having huge volume, just huge volume. And I got to tell you, I don't know what to make of it, given that the bonds, they've rallied a little bit and kind of stalled out the last 2 days, but they are getting it done in terms of overall volume. Okay, just huge by huge in here. By the way, keep an eye, as I was saying a moment ago. Microsoft continues. It's not playing a critical role yet. Okay, but if you're going to see this marketplace fuel itself and be up 36 to that expected move, Microsoft has to come to life. And that's your market right now is Microsoft versus Nvidia. Okay, the battle of good and evil. You pick which one's good and which one's evil. That's up to you. Anyway, looking at some of the order flow for the first time this morning, in Nvidia, nothing too crazy, nothing too interesting in here. The number of calls traded at the ask or above is just slightly above the number of calls traded at the bid or below. Okay, this is indistinguishable in terms of the order flow, which again cannot comment enough. The Nasdaq this morning is definitively underperforming those S&Ps, which, as I said, leaves a little bit of risk on the table. But you can see Microsoft coming back to life right now. So we're still a mixed bag of goods in some of the big tech stocks, which we've been throughout the course of the week. We've seen Microsoft, which rallied back a little bit yesterday. And again, to look at this, you look at auto expected moves, and Microsoft rallied back. It's sitting basically on the lower edge of expected move. Apple throughout the course of the week, Apple got hit hard on Tuesday. Okay, nothing thereafter. Okay, it's amazing though to see, and I got to tell you, this really is amazing to see. The Nasdaq right now is flat on the week. Okay, that is shocking given the move, and I can't put enough weight into this. If you told anybody in this business, okay, and I mean anybody in this business a few months ago that Apple, okay, would be down on a year-to-date basis some 8.5%, that Tesla's down 27%, okay, that Google is down, right? Well, only like 1%, but just those three products, okay, being down, could you have imagined that the Qs, okay, would still be up almost 11% in the year? I mean, that crap is crazy. The Nasdaq right now, again, as we've mentioned day in and day out, it's being run, okay, by Nvidia, and all of the market cap that's being lost in Apple, all of the market cap that's being lost in Google is being transferred, okay, on a, it's not even a one-for-one basis. Everything coming out of here is going into Nvidia. Everything coming out of Google looks like it's heading into Meta. All right. You can even see Google's got a bid back under it today, but it's a dangerous proposition. I mean, again, it's just capital rotations. Dangerous proposition, though, is how long does it actually persist? Okay. And if one more product, and by the way, here's the first time Microsoft actually broke. And you can see the Microsoft literally took the NASDAQ higher. That was what was holding it back. The last 4 minutes, you will see NASDAQ higher. Okay, so we're right on in the assessment of which product is moving markets. Last 4 minutes, the market's higher. That last 4 minutes is exactly where Microsoft broke to the upside. Okay, moreover, taking a look at Apple. Okay, Apple has a little bit of a bid back under it. Okay, we're not out of the woods though just yet. We have some weird rotations going on here. All of a sudden, we're buying tech, possibly selling like some of the financials. Okay, the energy sector also started struggling the last couple of moments. So it is edgy. Okay, it is edgy. Trading opportunities right now. The biggest thing that I am actually looking for at this point is some of the catapult trades. Okay. It's the biggest thing because it's the most non-biased thing, I can do. And it's also, if it pains you to take bullish positions, if it pains you to take bullish positions and stuff like Nvidia, when it's basically every day at all-time highs, okay, that's how you take your shots, right? Or moreover, if you want to take bearish shots, okay, how do you take your bearish shots? Well, you go out and sell some puts in the S&Ps and then, buy spreads in any one of these 7 stocks. There's a little bit of a correlation issue, like in Apple. Apple's gone down with the rest of the marketplace going up, which has been challenging. Okay, no question. But Apple's still a very interesting candidate. Like if you were bullish on the S&Ps right now, okay, I would think a bullish trade on Apple would also suffice. Why? Look, if the market's going to continue to propagate to the upside, Apple eventually plays not just a role, but a significant role back to the upside. Other opportunities right now, if you look at stuff like Tesla, okay, and I'm actually going to take you into what I would construe as pretty high risk trade. If you look at something like Tesla, I'm going to go 35 days out. And by the way, so we're all clear. The next earnings here is not until April 17th, okay? April 17th. So I'm looking at the April 12th expiration, and I apologize. My eyes, like, it literally were like right here. Okay, I kind of knew where it was already because I was looking at Tesla the other day, but April 17th, one of the trade opportunities right now would be to back spread in Tesla. Okay, why? Why back spread in Tesla? And I don't like a 40-cent debit. That sucks. Okay, back spread. 18-cent debit's not that bad. Let's actually bring this to the Analyze tab. We gonna analyze something. Okay, so here is the quintessential. I apologize because I just accidentally flipped it there. There we go. Here is the quintessential back spread. So it's a back spread. Here's where Tesla would have to get back up to about 210. I just want to show you in the worst case scenario here, Tesla has to get back up to about here in the next 35 days for you to make a lot of money on that one. And I like trades like this. And the reason I like trades like this, Tesla's had the crap beaten out of it. Apologize here. Tesla's had the crap beaten out of it. This trade, though, does tie up quite a bit of margin. So what you have is a back spread. And again, these are trades where the back spread needs an explosive, okay, kind of unrelenting move back somewhere in the neighborhood of 220 to see really good degrees of profitability. Okay, the way the trade works is you could be profitable right off the bat. Okay, but looking at a worst case scenario, it's basically 210 by 220. Okay, if you hit 220, worst case scenario, you're making about $1,500. And by the way, again, don't just take my word for it here. Just take a look at 220. Worst case scenario, you're making $1,600 on a 1-unit trade. So this is the kind of thing that I would look for on stocks that have had the literal crap beaten out of it. Anybody want it? Okay, here's the downside. The downside of the trade is it's going to tie up some margin. It is going to tie up some margin from the 180 to 195 level. So it's going to tie up about $1,500 per contract minus the 18 cents, right? So that is a trade that you can do. But, and again, I can copy the trade, post it down below. Okay, come on, man. This is not, okay. This is not something categorically that I text out. Margin is 1,500 per unit. All right. I wanted to show that. Now, I think that that is an opportunistic trade at this point in time. Okay. I think that you could probably also make the same exact argument inside of something like Apple. Now, Apple's less explosive, but because Apple is less explosive, the back spread itself will trade, okay, for significantly less. Like you're not going to have to tie up as much margin on the back spread. And again, here's one. Excuse me, coffee. Here's one that you can even do some 42 days out. Like Apple has no earnings coming up, yada yada yada. But the Apple trade is trading like 170-ish. What you do have to worry about in Apple though is some of the dividends. Okay, that's the last dividend payable. Got to be careful not to get run over too much by the dividends in any regard. I'm just bringing up a couple of different ideas over here. This is like a $2 credit. If I go in here and analyze this trade, bear with me here. If I go in here and analyze this trade actually looks like, okay, you're profitable to the range of about $2, even if Apple goes to basically zero, right? You have to cross through the valley of death, coming out smelling lovely on the other side. Remember, the back spread is the Andy Dufresne of trades, okay? 188, okay? 188 is the absolute, drop dead break even. See, I don't like this trade. I think 188 is too far. That's 42 days out. I actually do not like it. I don't mind building a trade and being like, this trade sucks. Okay, this trade sucks. Here's another one. I don't like that one either. It's just weird where the product's trading right now. This one's better. Okay, hold on. I'm looking at things. Here, the product still has to get to 185. And again, I don't really care what the stock is, but it's getting 180. I don't like it. Apple is not pricing well for back spreads. Okay, Tesla actually priced really well for back spreads. So you kind of ask yourself, what else has had the crap beaten out of it and could bounce back? So why do you look for bounces? Okay, why do you look for bounces? You're looking for a bounce because the back spread just prices really, really well. Okay, in the midst of that. Speaking of really, really well. And again, did we hit this one spot on? Oh yeah. Microsoft, okay, broke the range, took the entire NASDAQ up, right? The market as a whole, we're talking about the that's the NASDAQ, but the market as a whole, like the S&Ps, also kind of went for it to the upside as soon as Microsoft, okay, kind of broke, right? That was, as I said, the linchpin. There's no question that Apple has a decent rally under it as well, okay? Meta's still flying. Nvidia, ironically enough, Nvidia is not. I mean, it's up 3%, but it's not participating right now in the rally, which this is a little sketchy this morning. It's a little more than just sketchy. Okay, Nvidia could become rather pivotal. I mean, it is the stock that's driving markets, but it becomes much more pivotal as we continue on. Now, I'm going to tell you exactly why. There's a concern that capital has been rotating from Apple into Nvidia. Now you're in a situation where Apple is actually up. Microsoft's even rallied a little bit back on the day. Okay. Does that then imply that we start whacking Nvidia's market cap to some degree? Or is there enough capital to go around? I suggest to you, you're going to get some scary moments again in Nvidia. We've had a few scary moments. Nothing yesterday at all. Yesterday was absolutely craptastic inside of Nvidia. I think you're going to get some scary moments in Nvidia today. It's going to spark some fast moves inside of the NASDAQ. So look, okay, objectively at NASDAQ, might be sitting at all-time highs. Look for some fast, unrelenting pullbacks in here. I'm not going to tell you it's going to sell off, but there's going to be some big pullbacks on an intraday basis. And that looks largely predicated by some of the price action that I'm seeing inside of NVIDIA right now. The number of calls being bought has definitely picked up in here. The number of puts actually traded is heavy. It's dead even, but it's heavy. Okay. Heavy price action in here. I like it. Okay. I like it. All right. See how this continues to kind of go here. All right. Onward and upward. All right, questions, comments. There's a bunch of stocks I had to talk about, but no, I like the questions. Some trade opportunities. I like the back spreads right now. When you have that kind of degree of uncertainty, okay, where you're like, this thing's to me, it's always hard to want to buy. Okay, this. Like that to me, and you can hop on trend and do everything you want. You could buy call spreads. Okay, but for me, that's categorically a difficult trade. What makes it easier for me is when I use trades like back spreads when I'm putting them on for a credit. Okay, then I don't give a damn. Then like, okay, if we hit new highs, Tesla might be involved in it, and great. Okay, and if we actually crack a little bit lower, then so be it. Okay, yeah, the tape today. Okay, even though we're up, okay, and we're up now 0.5%. This matters, and we're very close, as we said. You're going to see some big price action in markets today. We're really getting close, okay, to the upper edge of the expected move. Can you believe we're saying that crap again? Okay, upper edge of expected move. is in sight for the marketplace. And if you just trickle just a little bit higher from here, we just hit it. That's it. Okay, it's over and done with. And by the way, if we hit 5,200 on the trading day, which we're only 11 handles away from, day's over. All you're going to do is just sit here and like skirt around that move. I was looking this morning at exactly this. Okay, the expected move. This is the weekly expected move, but I was looking at it this morning. I'm thinking to myself, I'm like, man, it just lines up really nicely because a $36 move basically takes you to right here. Okay, I'm not ready to call it, chicken's done just yet, but all you do is trickle just a few points higher, okay, and the chicken is done. You'll just hit the upper edge of expected move, and then what you'll see throughout the course of the day will come up here, come over, okay, and we'll just kind of skirt this line. Maybe a little opportunity to go a little bit higher, okay, but all kinds of chaos though still playing out in most of the tech stocks. And again, tech stocks now are all positive on the day. What's weird today is we're not really seeing any rotations. Okay, we're not seeing selling in financials. Lately, we've seen, okay, selling in tech, buying financials, or selling financials, buying tech. Okay, here, I think the only sector that's just listlessly dead right now is the energy sector, but the energy sector has had a hell of a week. It's already bid, quite a bit. With that, okay, bond market sitting at the upper edge of an expected move, already had its move earlier this week. That's not doing much. There's just a lot of volume inside of the bonds. I also want to comment on, if you're not watching this, well, here, okay, volatility, specific VIX and volatility has actually once again come slightly higher with the marketplace going higher. I don't like that, okay? As 20 something years in this business, you are trained to look at stuff like markets rallying, okay? Markets rallying and volatility rallying has often been, okay, the kiss of death for markets, okay? And it is unusual. It's even more unusual to see it in consecutive trading days. So to see volatility, categorically speaking, higher. And when I say higher, you're like, no, man, volatility is down. What the hell are you talking about? Really? Volatility is going up right now. Okay. Volatility is going up in the last few minutes with the marketplace hitting new highs. That, okay, you're trained as a trader to look for. All right. Why would volatility be going up with markets and new highs? We're basically, there's two different, schools of thought on this one. One of it is, we're ramping up for a big, move to the downside. The other one is, okay, that the volatility itself is going up with markets going up. Okay, which is basically you're seeing a volatility expansion with markets going up. That is in both of those scenarios. And again, I say there's two schools of thought. So yes, markets can rally. Like Nvidia has been rallying lately, okay, with its volatility exploding. That can't be right. That cannot be right. Hold everything. Holy crap, it's right. That is one massive freaking move. It's the highest volatility you've actually seen. It's higher than earnings right now in Nvidia. This is why the VIX is actually still moving up. You're one stock. That's why the VIX is actually coming up. It's Nvidia. Okay. The market's actually pricing in some really, you have one product that is moving so fast in terms of implied volatility to the upside that it's actually resonating and having an impact to the overall marketplace. Oh, that's one for the books. Okay. That is definitely one for the books. There's your reason for implied volatility in the overall market going up. Okay. By the way, this is one of the ones that, you see it, and I know this sounds crazy. Take a screen capture of this. Why? Because it's that good. You ain't going to see that too often. That's implied volatility skyrocketing, okay, with the stock going up. That's some crazy, crazy stuff in here, okay? It's not just going up. The implied volatility is skyrocketing. Look at this, over 100% in the implied vol for today, but next week, that's 7 days out, 75% implied volatility with an $80 expected move. Okay, that's not a healthy thing. Holy crap, the skew is even bigger. Why, okay, on earth would anybody want to entertain, okay, options in here. We, I said this probably 2 out of the 3 days this week, okay, or I should say, 2 times out of the 4 previous trading sessions this week. Here's the 3rd time. Nvidia is just absolutely unequivocally, it's so fever pitch right now that you need another term for it. Okay, I mean literally, like, you need another term for this. This is not, it's not only isn't it healthy, okay, this thing is going to get crazy. This could actually hit 1,000 literally today, very, very rapidly, in what could be one of the most epic squeezes ever. It would probably pull back dramatically from there, but you are right now seeing, okay, I mean, look, I just pulled up the implied volatility. That can't be right. Okay, you're seeing implied volatility. The IV rank is at the 92nd percentile. Okay, there's difference, by the way, between IV percentile and IV rank. This is more of an IV rank. Over here, it's 92%. It's basically it's like its highest implied volatility in the last year is being achieved on a move from roughly after the earnings from 800, okay, up towards the $1,000 mark. Okay, the stock has gone absolutely wild in here. This is it's dangerous. It's just dangerous right now. There's nothing else to tell you, okay, other than you can get caught up in this all you want, get on the wrong side, okay, of a move, get bullish at the exact wrong time, and yeah, you can get toasted in here really quick. But look at the market cap exploding as we discuss this. Start of the week, basically 2.2 trillion. You're basically 2.4 trillion right now. Okay, so it added $200 billion plus in market cap in the last couple of trading sessions. It's wild stuff here, just to show you in the last 5 days. But start of the week technically here, okay, to here, you're looking right now to 20% move in market cap. It's even more than that. Okay, it's 20% move in market cap inside of roughly 5 trading sessions. Bear with me as I'm showing you the move in here. Okay, the week started here as I was here. I'll get rid of this market cap at 2.4 trillion. Da-da-da, close that up. Okay, the week started right here. What I was trying to show you to right here. So I'll actually draw now. Draw a little bit of a trend line in there to show you the percentages. It's where the week started. This is where we're presently trading. Okay, and it's 17.5%. 17.5%. So that is the largest, I think, incremental market cap change that it's ever happened in markets. And most of that market cap is coming from Apple. In fact, you're now within you're $240 billion away. So what's billions amongst friends? $240 billion away from Apple losing its spot at number 2, the market cap. So Microsoft obviously is number 1, 3 trillion. Apple 2.6 trillion. Amazon's not even in the ballpark. Okay, Google and Amazon are neck and neck. Meta is actually over 1.3 trillion right now. There's no discussion anymore in Tesla and Nvidia. Nvidia is looking into to take a shot at the number 2 spot in terms of market cap, with well, basically the highest implied volatility we've ever seen with stocks rallying. Okay, I mean, I've seen stocks rally before, okay, with high implied volatility, but I don't think we've ever seen. Look at this. The IV rank just went to 97%. That's in the last 5 minutes since I just picked up on this. Okay, we are seeing right now, okay, the most catastrophic of moves to the upside. This is where, I expected this to happen even yesterday, where at some point, okay, people, listen, it makes no sense. Okay, look at this, 100% implied volatility. It makes no sense to want to buy any of these options. They're like, well, no, the stock keeps going up, but it won't, because at some point everybody goes, this is stupid. This is stupid. It's 111% implied volatility. Look at all the options in the chain. Okay, at some point everybody backs away and they go, this is stupid, and the stock will collapse. Okay, I'm going to just throw this out for you right now. Do you see what I'm looking at right here? Okay, this is stupid. Why is it stupid? It's beyond where VIX is. Okay, VIX is a $14 product. You open up VIX, and we'll go 39 days out, but you open up VIX, okay, and you see the wild skew in here, like, oh, VIX gets 28, it's 140% implied volatility. But the skew, okay, is so ridiculous right now in Nvidia that it looks, okay, it looks like something like VIX. I mean, Nvidia looks like VIX. That's how crazy the skew is. I'm going 42 days out just to show you, even 42 days out. Look at some of the option pricing in here. Okay. I mean, why would anybody in the right, mind buy this? And this is where, okay, exactly. Retail traders might not know, but professionals are going to look at this and they're going to start to back away. Okay. Somebody said, would you sell a call on Nvidia? So you can, but Nvidia very likely is going to eat way too much margin, and you can't use call spreads. Nvidia is fast market conditions. They're going to call a lot more margin on Nvidia right now, if the firm is smart anyway. It's just, if you sold a call in here, they may hold dramatic amounts of margin. So on the professional side, yeah, they're going to sell a lot of calls in here. Okay. On the retail side, I just don't think you want to make that argument, because it's not even about too much risk. Yeah, there's too much risk, but the margin requirements for you will be phenomenal in there. Okay. And again, this trade, somebody just said it's not stupid, it's just bulls. There's no bullish or bearish in here. It's the dispersion trade. Okay. That's where I'll be nice in saying this. That's where the stupidity comes in. Like, you have to understand that these trades that are going on, that you're seeing inside of Nvidia, okay, yes, retail is latching on. Yes, retail is looking at this and going, yeah, we're getting bullish. Okay. All the retail trade out there, you're not going to move Nvidia. You're not going to move Nvidia. And I say that, okay, because I want you to think about the number of accounts. All right. Just stop for a second. Think about the number of trading accounts like Charles Schwab, which is by far and away the biggest brokerage firm. It's like 20 million trading accounts. Okay. Let's say of the 20 million trading accounts, 2 million even have options approval. That's it. About 2 million, maybe 3 million at most have some sort of options approval. The only options approval was like level 1 or 2, which implies they can only buy options. Okay. Now, do you really think, let's say it's 3 million accounts. Okay. Even throw the number out there, 5 million accounts. Do you think all 5 million accounts are bullish right now? Okay. Inside of Nvidia, even if 1 million, okay, are bullish, they've traded right now 761,000 contracts. Okay. The numbers, like, when I say about this, like, the numbers don't work out. Okay. Even if 10% of all retail trading accounts were buying calls in here, which there's clearly some call buying, okay, it wouldn't have much of an impact. What you're seeing in here, okay, is algorithmic trade just slamming into the marketplace. Okay. And as they do that, the volatility is exploding, because the market making side of the firm is like, look, supply and demand dynamic here. Everybody demands these options. But the reason that the trading firms are doing this, it's not because they're profiting per se from buying the calls. They're profiting from this constant dispersion, okay, between Nvidia and S&Ps. Okay, it's a wild game of chicken, and it has gone on longer, okay, than anyone has ever figured it would, including the trading firms. Because buddies that work at the trading firms that are like, this is all kinds of chaos. We'll, I'm sure, talk later today, okay, about how Nvidia's implied volatility. I mean, holy crap! I think you can look at this even on an intraday basis, which is all kinds of. You never see implied volatility moving on an intraday basis. Never. That's insane. Okay. It's one of the things that, you could trade in this business for 20, 25 years and maybe never see another move that fast. Okay. We saw moves like this back in 2021 on the meme stocks. But it was very different because they were super small, like micro market caps, right? Tiny stuff, a couple of $1 billion. You're seeing implied volatility go. Okay. And by the way, this implied volatility, so everybody's kind of clear about this, this is not like just short-term volatility. The volatility that's being calculated right here, which is presently 70%, okay, that is actually what we term This is what is termed a VIX style IV, which is a 30-day averaging formula. So 30-day averaging formula. So this is not implied volatility at the moment. This is not implied volatility in the front expiration. This implied volatility 30 days out. And that implied volatility today has roughly gone from 60% to 70%. And we're 45 minutes into a trading day. Okay. The situation has come to a head. This is it right here. This situation has come to a head right here. Okay. This is going to be a defining moment for Nvidia today, not tomorrow, not Monday, not even Saturday. It's going to happen today, right? You're going to see some wild movement out of this. I am not, okay. I don't want to be like misinterpreted with this. I'm not saying that Nvidia has to completely fold. Okay. I am saying it absolutely has to make these broad moves down. Implied volatility got to cool off a little bit, and then it can actually bounce back. It has to mellow out, okay? Or the trade, it doesn't just dissipate. The trade starts to collapse on itself. Dispersion is only worth, okay, so much. You can only sell so many SPX options to finance, okay, your Nvidia trade. And if your Nvidia trade goes up to 100 and some odd percent, 111% here in the short duration. Okay, at that point, that's where the chicken gets done. So you're going to see some very dramatic moves, and what's going to happen when these dramatic moves, implied volatility, it'll come back down. By the way my chart is set up here, if you guys are interested, I'm just in a 1 day, 1 minute, cleared the chart, and I just put implied volatility on here and removed. I removed the volume. I don't want to see the volume right now because I just wanted to see implied volatility because it's that, okay, crazy. And again, this is 30-day implied volatility. All right. Now, this is where everybody wants to like hop on board. And it's a hard trade. Okay. It's a really hard trade to hop on board. I think the implications, you don't trade Nvidia here. You come into NASDAQ. Okay. The implication is that the NASDAQ, look at the implied volatility in the NASDAQ. So you're like, oh, why is the implied volatility in NASDAQ going down? Okay, I'll tell you why the implied volatility in NASDAQ going down, because everybody's selling every option you possibly can here in NASDAQ, and they're selling every option they possibly can here in the S&Ps to finance the Nvidia dispersion. And eventually, it's going to work the exact opposite. Implied volatility is going to come right back up in the S&Ps today, and Nvidia's implied volatility is going to go down. This is going to be cool. This is going to happen right now too. Okay. I mean, I only have another 12 minutes on. Okay. But this is the kind of stuff that you don't get to usually see, like a dispersion trade imploding upon itself. So at some point, when I'm trying to explain to you guys, the juice ain't worth the squeeze. Okay. And I think I've only ever seen like a dispersion trade rip apart, maybe a handful of times. Okay. But if no one's ever seen it in, a $2.4 trillion market cap. Okay. This thing could blow up like the Death Star. That's awesome. That's the analogy for the weekend video, right? It could implode like the Death Star over here. But again, I don't want to be misinterpreted. I don't think you should trade Nvidia. Okay. I mean, it's like moth to a flame. Everybody's, if you want to put your foot in the fire, all right, Nvidia. Okay. So it's what I actually prefer to call, this is licking the 9 volt. Okay. It's not really a good idea. Just, everybody did it when they were like 8 or 9, when your older brother said it was okay to lick a 9 volt. Okay. They said nothing would happen to me. Anyway, this over here, it's too high of risk, right? So you move to the product that is going to be lesser risk, right? That's a screw up in implied volatility. You're going to move to the product that's going to be a lot less risk in here, which would be NASDAQ. And you'll be okay. Like if you think like an Nvidia pullback comes, what you do is actually trade it specific to NASDAQ. Anyway, Nvidia is going to be Mr. Toad's wild ride throughout the course of the trading session. I am a little surprised. Okay, it didn't just straight shoot for 1,000 before, but the day is young before it actually implodes like the Death Star over here. And again, an implosion doesn't mean the implosion on Nvidia doesn't necessarily mean it's going to pull back and stay back. It's got to pull back though to reload for IV. But that I implied volatility just it's just craziness. Okay. Nobody here else licked the Like the 9 volt thing, huh? Okay, a couple of people understand that. I have a brother that's like 6 years older than me. Okay, yes, that's what happened. Actually, he was pretty mild. It was the having an older sister. That's the one that really screwed me up. Now, okay, I must have done something horribly wrong somewhere because I have a 14-year-old daughter. Oh man, I did something horribly wrong. By the way, Costco. I didn't even mention any of the individual products because Nvidia has been so fascinating today. But look at this, Nvidia still going. Okay, still going. Mellow it out though. Costco. Let's go into Costco for just a moment. So Costco, the reason I'm bringing it up, it had a $44 implied move. $44 implied move. Survey says, okay, it's a $42 move. Now it hit the $44 move already. Okay, so it's a hit. No, it hit its expected move spot on. Costco, though, again, I've been like fighting with people constantly, not even so much in chat as I get into it with like Jeff Bierman about this too. Costco, okay, has absolutely no bearing on the overall market. No one gives a damn that Costco is down 5% today. Okay. Now, granted, Costco has not downticked forever. Okay. When was the last downtick? Oh, that doesn't even count. Come on. It doesn't even count. When was the last real little sell off in here? Okay. A 5% or more. There's nowhere on this chart. Okay. It's the first move it's really had. And look, it has no bearing whatsoever on the S&Ps. I'm just throwing that one out there for your consumption. Are you listening, Jeff Bierman? Are you listening? I just want to make sure Jeff hears me. So, yeah, we should just bring Jeff on with me and battle to the death. It's good stuff. Okay. So I talked a little bit about the trade inside of Tesla. Okay. The other trade that I'm going, into a early grave on right now is inside of Caterpillar. Okay. Caterpillar, I still have 14 days left, but it's $15 expected move. Okay. It's not enough. I mean, Caterpillar would have to implode for me to actually see degrees of profitability. Literally, this thing is trading here. Okay. I'd rather it here. It's a $22 move I need for a pullback in there. It's not completely over because the marketplace is sketchy right now. No question, the marketplace is sketchy. Nevertheless, okay, that one, it's gone right now. It's gone. There's nothing I can do about it. Right. Another trade that I've actually got on. This one's still very much in the dance floor, Wells Fargo. And I'm going to do updates today. Wells Fargo is right on the dance floor still. We're okay to go in here. We have 20 days left. Other trades that I've actually put on. Okay, I have a bullish trade now inside of Microsoft. The bullish trade in Microsoft is still 70 days out. It's part of a catapult. Okay, the reason is Microsoft stalled out. If the marketplace is to continue up, I think Microsoft plays kind of an epic role in just that, right? But moreover, Nvidia. Okay, if you look at Nvidia and people again, they want to trade Nvidia. Okay, I argue that the way to trade Nvidia is not through Nvidia, and I want to be heard on this one because people are going to get hurt whether you're bullish or bearish. Okay, the bullish trades in Nvidia are, like, look, if it's going to hit 1,000, you're like, oh, it's going to hit 1,000. If it closes above 1,000, just to show you, even if it closes above 1,000, this is the kind of trade you want to do in there, like the 995, 1,000 for $1.50 and change. Okay, that's only 7 days out. You pay the $1.50 if it closes above 1,000 next week. Okay, you're going to make $3.50 off the trade. And I want to be heard on that one because I don't think that the best way to trade Nvidia is to trade Nvidia. I think the best way to trade Nvidia is to use something like the Qs. But if you're going to trade Nvidia, this is how you do it. If you want to be bullish, spread the risk. Okay, that's the only way you can make an argument because the skew then is helping you, right? Because you're buying like a 74 vol and you're selling like a 75 half vol. That makes a hell of a lot more sense though in doing that. In any regard, Nvidia, okay, still holding itself together, but it's so ironic that as soon as we mentioned the implied volatility in here, stalled out. Okay, I said it doesn't. It has to have eventually like an epic pullback. Even today, it's going to have like a little bit of a pullback, but it has to flatten out. That implied volatility has to kind of cool off before you can actually continue, along your merry little way. Speaking of implied volatility taking off, I am kind of curious as well. You're just now seeing implied volatility start to come back to life. maybe inside of Meta, okay? But it's nothing in comparison to Nvidia. In fact, I go to studies, I just go add study. By the way, just use the general implied volatility study, okay? Implied volatility, it is what it is. And it's looking Meta, it's just coming back to life, but like, okay, Nvidia, is this the 100th percentile already? Have we hit it? It is highest implied volatility all year, okay? Call me crazy. That is crazy. It's the highest implied volatility all year. In fact, sure, what the hell? Let's actually open up a 3-year, okay? It's equivalent, all right, to some of the highest implied volatilities. Now, there's a better way to actually, I'm going to study something. I'm going to study this. Let's go over here to add study, okay? Come down to implied volatility again. There it is. And I want to look back over the last 3 years. Let's get rid of the volume subgraph, go over here to Sprocket, equities, volume subgraph, hit apply, hit OK. This is not the highest volatility we've seen over the last 3 years, okay? But it's right up there. The implied volatility is way beyond. Like, by the way, every one of these other instances deals with earnings. That's earnings, okay? This one's actually between earnings. I'll give you that, but that's actually a huge sell-off, and that was in 2022, okay? Earnings related. Earnings related. This, it's not earnings related. All right. It is an absolute parabolic market move. Okay. S&Ps at this point in the morning, they're up 26. Okay. Again, trade, feverish out there. I didn't even have much time to mention like the dollar this morning, which has actually been imploding a little bit upon itself. Nvidia is just, Nvidia has become the entire marketplace. Even stuff like Microsoft kind of flattened out a little bit this morning. But I am surprised to see, okay, that Nvidia, it's not the only product that's trading up. Apple's on a little bit of a bounce. Okay, Apple's a big threat. I mean, it could really move the Nasdaq up. Speaking of Nasdaq expected move today is 185 points. Okay, again, Nasdaq expected move is 185. What's it moving right now? A little over half that. So if you're looking at Nasdaq and saying, yeah, there's room to run, you're right, there is room to run. Okay, that could be some two-sided trade though. Nasdaq right now is just above, okay, where it started the week. It's the S&Ps that are getting very close to the upper edge of an expected move, although they feel like they've kind of softened a little bit here. We'll see what actually occurs in the next hour or so of trade. Contract size right now in the S&Ps starting to die out a little bit. Look, I know I want to come in here and Monday maybe fire off a couple more trade opportunities. But for right now, I'm going to sit back, relax, let the Nasdaq do its thing. Again, fever pitch inside of Nvidia. Okay, it's like the 3rd time this week that we've actually said that. Some just wild moves though, and here we go again. Okay, the march to 1,000. It's on. So we're going to bring on Jeff Bierman here momentarily, and Jeff, okay, is going to be talking about Ask the Analysts. It's the March 2024 lightning round. For those of you that don't know that, though, excuse me, I'm going to preface this with you can actually come in chat and actually ask Jeff some questions. So Jeff doesn't always watch chat. Okay, he's, he educates, he does the coaching sessions here, but Jeff is going to look at chat and answer some questions relating to chat. But you can basically ask him anything you want about any individual stocks. Okay, even if he doesn't know the stock necessarily, he'll bring it up and do an assessment kind of on the spot. Okay, Nvidia breaking new highs over here. Again, all kinds of crazy right now in this marketplace, with a market that is owned at this point by one stock. Not healthy, but still something we got to deal with. All right, S&P is up some almost 30 handles. Remember, the expected move today is 36. Here in the S&Ps, the expected move is 185 in the NASDAQ, and we ain't home yet. Last point to be made here. Look, implied volatility not backing off an ounce this morning. Nothing. So implied volatility still relatively high, with the S&Ps, well, higher. Stay tuned. Jeff Bierman is coming on right now.